Welcome back to my channel where we talk all things money and investing. Today, we're going to talk about how to invest in individual stocks like a pro. For legal reasons, this is not investment advice and meant for educational purposes. As always on this channel, teaching how to make money work for you, because who wants to work for money? On today's agenda, first, you need to do your research and find a company you believe in. Secondly, you need to open a brokerage account to buy and sell stocks. When selecting stocks, it's important to consider the company's financials and future prospects. Then explaining the importance to have a diversified portfolio to mitigate risk. Lastly, buying high and selling low while monitoring and adjusting your portfolio accordingly. By following these tips, you can invest in individual stocks with confidence and potentially see some great returns. So you want to make some cash, huh? Well, investing in individual stocks can be a great way to do just that. Now, before we dive in, let's clarify what exactly a stock is. A stock represents a share in the ownership of a company, and buying a stock means you're buying a tiny piece of that company. When you buy a share of a stock, you're essentially buying a piece of that company. And, as a shareholder, you have a say in how the company is run, and you can benefit from the company's profits. So if you invest in Apple, for example, you're buying a tiny slice of that delicious iPhone pie. So, what types of stocks are out there? Well, there are a few categories to be aware of, and they all come with their own risks and rewards. We have blue chip stocks, growth stocks, value stocks, dividend stocks, and penny stocks. In an upcoming video, I'll dive into the details of what each stock type is. In a previous video, I talk about the risk associated with stocks. That video will be linked in the description. Step 1. Do your research. Research. It's important to do your due diligence and research the companies and type of assets you're interested in investing in. Don't just rely on what your Uncle Jerry tells you at Thanksgiving dinner. Look at the company's financial statements, its history, its competitors, its management team, earnings reports, and any news that might impact its performance. Make informed decisions based on research. You want to make sure you're investing in a solid company with a promising future, not a sinking ship. Step 2. Open a brokerage account. Now that you know the types of stocks you can invest in, how do you actually go about investing? Well, first you need to choose a brokerage firm. There are a ton of options out there, from big names like Fidelity and Charles Schwab to newer players like Robinhood and Webull. Do your research and choose one that suits your needs. If you're interested in stocks, mutual funds, and bonds, find a brokerage firm that can trade in all three. This usually involves filling out some paperwork and providing some personal information, like your social security number. Don't worry, it's all on the up and up. Next, you'll need to fund your account. You can do this with a bank transfer or by linking a debit card. Then it's time to do more researching. You can use resources like Yahoo Finance or Seeking Alpha to get a sense of how a company is performing and what analysts are saying. Step 3. Diversify your portfolio. Choose your stocks. After researching companies, choose the ones that align with your investment goals and strategy. Never put all your eggs in one basket. Diversification is key to successful investing. Don't just invest in one company. Spread your investments across different sectors, industries, and geographies. Spread your money out across multiple stocks and other investment types like mutual funds and bonds. This will help mitigate the risks of individual stocks and protect your portfolio from unexpected losses. Once you've chosen a brokerage, you'll need to open an account. Step 4. Buy low, sell high. Sounds easy, right? But it's harder than it looks. When you buy individual stocks, you want to buy low and sell high. This means you need to have a good understanding of the stock's valuation and its potential for growth. You don't want to buy a stock at its peak and then watch it plummet. That's a sure way to lose money and gain a few gray hairs. Remember, the stock market can be volatile, so it's important to have a plan in place and not get swept up in the emotions of the market. Once you've found a stock you're interested in, you'll need to decide how many shares you want to buy and at what price. Again, do your research and make an informed decision. Then sit back and watch your investment grow. Or, shrink. It's all part of the game. Step 5. Monitor and adjust. Keep an eye on your investments and adjust your portfolio as needed. Remember, Investing in individual stocks is not a get-rich-quick scheme. It takes time, patience, and discipline to be a successful investor. Investing in individual stocks can be a roller coaster ride. The stock market is known for its ups and downs, and it's easy to get caught up in the emotional roller coaster of stock prices. But don't panic. Stay patient, keep a level head, and stick to your investing strategy. Remember, investing is a long-term game, and short-term fluctuations should not affect your overall strategy. So, there you have it, folks. The basics of investing in individual stocks. Remember to do your research, diversify your portfolio, buy low and sell high, stay patient, monitor and adjust, and have fun. Now go forth and make some money, or at least have fun trying. Make sure you do your due diligence and don't invest more than you can afford to lose. And as always, thanks for watching. See you in the next video. Happy investing!